that I want to make sure that people take note is the C-class apartments. So if we go back to 2009 and we really look at what happened in 2009, and then we mimic that to what potentially could happen in this economic situation or crisis that we're in, C-class is really what you want, because A-class apartments, you're going to see the rents come down in those and the values of those buildings come down. B-class, it's kind of hit or miss, but in 2009, those prices of those vacancies went up and those prices of rental went down. But then there was the C class, the ones nobody else want that you were buying, that went up in value, rents went up in value, and everything went up. So appreciation went up. I mean, and this isn't an economic collapse that this happened. Like, is that why you did this? And how, like, I didn't mean to like throw your story off. I just feel it's so important to talk about C class, because that's the stuff that people avoid. They're like, I don't want those, but that's what you want right now.
Everything is a risk, and the risk of that is also depending on the return and the dollar point that you're buying at. So these were actually single family houses that I actually start off in. And prior to the crash, these houses were selling between $100,000 to $120,000. They were like your typical Midwest 1950s style bungalows. And the first property that I bought at $60,000. It was a 50% discount. And then as the time went on, those houses, this is absurd, we were buying them as low as $4,000 a house. Now, mind you, the houses were totally devastated. Like, we had to put 30, 35 back into them, totally rebuild them. But at the end of the day, I'm all in at $40,000. I'm receiving the same rent as I would in a B-class market, but that B-class property would sell for $100,000. So I could have 3 houses in a C-class market for the 1 house in the B-class market. So I was making triple the rent, and I was just also protected just by some economic scales. You know, if I had 1 tenant that moved out of those 3 rentals for $100,000, I'm 2/3 occupied. If I had 1 tenant in that B-class property and they move out, I go from 100% occupied to 100% vacant. So, you know, today we look back at this and say I'm a genius, but at that time, everybody in my circle thought I was crazy. You know, why would you buy in that market? Well, because I'm buying at such an advantageous price point that there is so much cash flow, and we're protected and isolated. Cash flow is what protects us. If we have a property in an A-class market, you're making $100 per month on rent, you're making $1,200 a year, 1 eviction can cost you 2 years of profit. 1 roof repair can cost you 4 or 5 years of profitability. So when you can make $300-400 a month on a single family property, you have a lot more cash flow to offset the challenges, risk, repairs, CapEx, move outs that you will encounter.